Hey everyone, David Trungale here from TraderTours.com. I wanted to go right ahead and challenge the traditional teaching in the financial business that states that when you invest in shares of a stock, you are an owner of that company. Because I have always found that to be a little bit misleading, even though the textbook states that you have a claim on the company's assets and a claim on the company's earnings. So you have to remember that ownership is really represented, in theory, by holding these paper shares, and that's it. Now, some people may be thinking, well, wait a minute, if the company goes bankrupt, I, as a shareholder, have the right to the company's assets. Well, that's true, but you have to remember that the creditors are paid off first, and there is no guarantee that there will be any assets left. So, take my word for it, you do not want the company to go bankrupt, and you do not want there to be a liquidation if you are a shareholder. You will end up losing a significant portion of your original investment, if not all of it. Now, the other point that I brought up is that even if you invested, let's say, $1 million into McDonald's stock, that's a pretty healthy position. What does that really mean, though? Can you walk into your local McDonald's and tell them that you're an owner and therefore you want to change the menu? No, you can't. You have virtually no authority. And again, you can't just go into the kitchen and say, hey, I have a claim on the company's assets, so I'm going to take this refrigerator, load it up in the back of my truck, and drive out of here. Again, you'll get arrested probably if you tried to do that. So what authority do you really have as a shareholder? You have paper shares that represent the theoretical value of this company. And there's nothing wrong with that. Again, as long as people believe that the value of something is there, it has true value. And I'm perfectly comfortable risking my own capital into paper shares as long as the volume is there and the demand is there. Now, what about having a claim on the company's earnings? Well, you have to remember that as a shareholder, there are really two ways to make money. Number one, collect a dividend. And some companies do pay a dividend, but many do not. The other way is through what is called capital appreciation, which is really simple. Let's say you buy stock at $50 per share and sell it to someone else at $60 per share. So you would have made a $10 per share profit. But more importantly here, the point I wanted to get at, is a rising stock a consequence of earnings? The real reason why a stock goes up is due to buying pressure within that particular market. Sure, a strong earnings report may serve as a catalyst and inspire people to buy those shares, but the reason for the thing actually going up is the buying itself. Also, I have seen companies post a negative EPS and still pay out a dividend that quarter. So is it really fair to claim that you took a portion of the company's earnings that quarter if the EPS was negative? In my opinion, no. So the bottom line here, guys, is your claim on the company's assets and your claim on the company's earnings is a lot more limited than what most people seem to think. Lastly, as a shareholder, you do have the right to vote for the company's board of directors, but you have to note that your voting authority depends on how many shares you have. And in many cases, for your common investor, that control is going to be inconsequential. So let's take Walmart, for example. Here's a company with a market capitalization of over $200 billion. That means even if you had $1 billion to invest, which I highly doubt anyone listening to this has, I know I don't, but let's just say you put $1 billion into Walmart stock. Your ownership as a percentage would still be less than 0.5%, which is pretty minor. So there you have it, guys. I personally like to view stock ownership as a separate concept from company ownership. Of course, I'm a little bit biased because I'm a technician, but nonetheless, thank you for listening.